Hello Investors Hub, this is Technical Indicator from the PennyStockExpress. You can watch this video in high definition, just expand and select 720p in your YouTube settings just below the chart. This will be a MACD tutorial, moving average convergence divergence, and that is an indicator. You can see that I use it down below on almost every single chart that I produce. Siri is the stock of choice. It's important to note that I've subbed in EMA 12 and EMA 26 for my normal SMAs 20, 50, and 200. The reason I've subbed these EMAs in is because the 12 and 26 are used in the production of this black line, which is your MACD line. Hopefully by the end of this tutorial I've done a good job and you'll understand why that's the case. It's important to note moving forward that my SMAs 20, 50, and 200 will be mixed in with the price action. They are lagging moving averages and used as support and resistance for my charts. So these will not be there, but they are represented within that black line. Hopefully you'll get that by the end of the chart, as I've said. Okay, so the MACD, as the name implies, is all about the convergence and divergence of two moving averages. Convergence occurs when the moving averages move towards each other. Divergence occurs when the moving averages move away from each other. Now the shorter moving average, the 12-day seen here in blue, is faster and responsible for most MACD movement. The longer moving average, 26-day, seen here in red, is slower and less reactive to price changes in the underlying security, in this case, Siri. All right, now the MACD is a simple and effective momentum indicator, but it's important to note it's derived from trend indicators and thus considered trend and momentum based. Essentially, it turns two trend following indicators, moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter moving average and producing the black line, as seen here. So this is your MACD line. Now the MACD fluctuates above and below the zero line as the moving averages converge, cross, and diverge. Traders can look for signal line crossovers, center line crossovers, and divergences to generate buy and sell signals. Now the signal line, seen here in red, is a moving average of the indicator. Thus it trails the MACD and makes it easier to spot turns in the MACD. All right, now the cross can be seen here, and the cross can also be seen here, where the black line crosses the red. That is the most popular use of the MACD and determines buy and sell signals, but it always doesn't work out. There are fakes. So it's important to know where those crosses occur in relation to the zero line and what other action is taking place with the stock. Now finally, the MACD histogram represented by the blue bars is a visual of the difference between the MACD line and the MACD signal line. So again, the MACD line is black and the MACD signal line is red. And the bar is a representation of the distance between those two lines. Thus, as the separation increases or decreases, so does the size of the bar. The plot of this difference is presented as a histogram, simply making the centerline crossovers and the divergences easier to identify. Now you can kind of see what I'm talking about here because you have a space between your signal line in red and your MACD line in black, and you can see that the bar is exactly the distance between those two lines. As those two lines get closer, the bars get closer. And that's all that is. And again, it helps you identify centerline crossovers and divergences. All right, so let me gather my thoughts here. The next most important thing to talk about probably after signal line crosses are centerline crossovers. Centerline crosses are the next most common MACD signals seen here and here. Now let me get this black line out of here because that's the zero line. Let me delete that real quick. You can see now that I've taken that black line out of there, it's a little bit more difficult to determine the center line. So let me drop it back in there, but I wanted you to see it without it. So we've talked about signal lines. Now we're going to talk about center line crosses. And basically, they also can produce buy and sell signals on a stock. So if you understand center line crossovers, and you utilize centerline crossovers with signal line crosses, you can start to get some really good buy-sell signals. For example, we have a centerline cross right here. It's a bullish centerline cross where the black MACD line crosses the zero line, the dotted line. All right, that's a bullish centerline cross. And just a few days earlier, we had a signal line cross below the zero line. So below the zero line is good, because the stock isn't necessarily really toppy at that point in time, we can see. And then a couple of days later, we get a center line cross. So these are two indicators that would have been signaling a buy in the stock. Now, how are those signals derived? Well, it's very, very easy to understand. A bearish center line cross is derived when the 12 crosses the 26 to the downside. You can see the 12 goes below the 26, and the cross takes place right about there. Now you can see that the MACD line crosses the dotted line right there to the downside. So that cross takes place when the 12 crosses the 26 to the downside. And then it goes below for a while, and you can see when the 12 crosses the 26 to the upside here is when your MACD line crosses the center line. So those center line crosses can produce bearish or bullish signals, okay? And just like the signal lines, there are fakes. They don't always hold true. But if you can utilize price action to support what's going on with the MACD, you can get some good readings. So those are your center line crossovers. Now the MACD is going to remain positive as long as there is a sustained uptrend. All right, there is no top and bottom on the MACD. All right, and it'll remain negative as long as there's a sustained downtrend. Okay, a bullish divergence occurs when it records a lower low, but the MACD forms a higher low. Okay, so again, a bullish divergence occurs when the stock records a lower low, so the price action is going down, but the MACD is starting to form a higher low. All right, so you can just do simple trend lines to form that. And a bearish divergence forms when the stock records a higher high. All right, so the price action is going up, but the MACD forms a lower high. All right, and you know how to do that from looking at my previous charts. Now, the MACD is not particularly good for identifying overbought and oversold levels like the RSI and the Williams percent R. You can see I have the RSI here and the Williams percent R, and I've already talked about those in previous tutorials. They're really good at predicting oversold and overbought. They are momentum indicators. It's good to only have one momentum indicator on your chart. I use two, but I really like the RSI and the Williams percent R together. You don't want to confuse things by having too many of them. So you should have one momentum, one trend, and one volume indicator on your chart. All right, that doesn't matter if you're experienced or a beginner. So I'm kind of breaking the rules there with the Williams percent R. Excuse me. If I was to pull anything off my chart, it would be the Williams percent R. So understand that RSI and Williams percent R predict oversold and overbought, but you're not really using the MACD to do that. You're using it for buy and sell signals. All right, it is possible to identify levels that are historically overbought and oversold, but it doesn't have any lower or upper limits, as I mentioned earlier. So there's nothing there to bind the movement like there is with the RSI, where we can clearly say the RSI is getting toppy because there's an upper limit and there's a lower limit. And same with the Williams percent R, where there's an upper limit and there's a lower limit. There just isn't such a thing with the MACD. All right, so in summary, the MACD is special because it brings together momentum and trend in one indicator. All right, so it's like a 2-for-1. It's a unique blend of trend and momentum, and it can be applied to daily, weekly, or monthly charts. So you can use this for, a daily 5-minute chart, or you can use it for a 1-year chart where you're going long on a stock. Your primary buy and sell signals, again, are generated from your crosses of the signal line. So when your MACD black line crosses the signal line, or when you have a center line crossover with the MACD, as seen here. And you can see that that occurs when the 12 and 26, which are part of the MACD formula, cross to the upside. Hopefully this tutorial on the MACD has been helpful to you. My name is Technical Indicator. It would be beneficial for you to preview my previous tutorials on the RSI, the Williams percent R, and the OBV, which will have now covered all the indicators that I use on my chart. I will be around all night, so if you have questions about this, please feel free to stop by the Penny Stock Express and ask. Otherwise, come on in tomorrow, Sunday, and we can go over it. Take it easy, everybody. Have a great trading session this week.